Most people assume that major recoveries begin with headlines. They imagine television anchors celebrating new highs, Wall Street strategists upgrading forecasts, and retail investors rushing back into the market. But history often tells a different story. The early stages of important cycles are usually quiet, and that's exactly why the recent recovery taking shape in silver deserves attention. Because behind the headlines, something much larger may be developing. Few people understand the chain reaction that could unfold. Silver occupies a unique position inside the global economy. It is simultaneously a precious metal, an industrial metal, and increasingly a strategic resource tied to national security, electrification, artificial intelligence infrastructure, and the energy transition. That combination makes silver different from almost every other commodity. And after years of supply deficits, shrinking inventories, and growing industrial demand, the market appears to be entering another important phase. Here's what's really happening behind the headlines. The recent rebound isn't just about price, it's about structural forces. It's about mining economics. It's about inflation and debt. It's about geopolitical tensions and supply chains. And perhaps most importantly, it's about understanding how modern civilization depends upon materials that most people rarely think about. Over the next few minutes, we'll explore 6 important questions. Why silver's recovery matters. The hidden supply problems few people discuss. Why industrial demand is changing the market. What history teaches us about similar periods. Why institutions and governments are paying attention. And what ordinary people should understand as these trends continue to unfold. Because markets move in cycles. And sometimes the biggest opportunities emerge before the crowd notices. Here's what most people don't realize. Silver's recovery didn't begin because of a single event. It emerged from years of imbalance. According to the Silver Institute and Metals Focus, the silver market has now experienced multiple consecutive years of structural deficits, meaning the world has been consuming more silver than it produces. Inventories have been steadily drawn down to bridge the gap. Recent reports suggest 2026 may mark the 6th straight year of shortages. The numbers themselves matter less than what they imply. Persistent deficits cannot continue forever without consequences. Think of the global economy like a machine. Silver sits inside thousands of gears: solar panels, electronics, military systems, electric vehicles, semiconductors, artificial intelligence infrastructure, medical equipment. When demand from many sectors increases simultaneously, pressure builds quietly. Mainstream media often focuses only on daily price movements, but the larger story is much deeper. The recovery we're seeing may simply reflect years of tightening fundamentals finally becoming visible. And if you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now consider the supply side. Many investors assume higher prices automatically create more production, but mining doesn't work that way. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's essentially how silver supply behaves. Roughly 70% of silver production comes as a byproduct from mining copper, zinc, and lead. That means silver miners cannot simply flip a switch and increase output when prices rise. New mines take years to permit and build. Ore grades have declined. Energy costs remain elevated. Environmental regulations have become more complex. And geopolitical risks continue to influence production. Mexico and Peru account for enormous portions of global silver output. China, Russia, Australia, and Chile also play critical roles. Any disruption in those regions can ripple through supply chains. Industry experts have repeatedly noted that mine production has remained relatively flat despite rising demand. That's one reason inventories have continued shrinking over recent years. Think of supply like a giant cargo ship. Changing direction takes time. Even if everyone suddenly wants more silver, the mining industry cannot instantly respond. And that lack of flexibility creates volatility, because when demand rises faster than supply, price becomes the balancing mechanism. Which brings us to perhaps the most fascinating part of the story. Silver is no longer simply a precious metal. It has become an industrial necessity. Solar power alone consumes enormous amounts of silver. Electric vehicles require silver. Electronics require silver. Artificial intelligence data centers need power infrastructure, semiconductors, and electrical systems that rely on silver's conductivity. Defense applications continue expanding. Medical technologies depend on silver's antibacterial properties. Industrial demand now represents the majority of total silver consumption, and analysts expect these technologies to remain long-term drivers. This creates something unusual. Silver benefits from two separate demand streams: investment demand and industrial demand. That dual identity gives silver characteristics unlike gold or many other commodities. Even when economic sentiment changes, industrial consumption continues. And if this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. History rarely repeats perfectly, but it often rhymes. The 1970s taught investors about inflation and hard assets. The 2008 financial crisis reminded the world how quickly confidence can disappear. The COVID disruptions exposed fragile supply chains. Energy shocks repeatedly demonstrated how interconnected the modern economy has become. And in each case, uncertainty increased interest in tangible assets. Silver has experienced dramatic cycles before. The late 1970s saw explosive moves. The aftermath of the global financial crisis created another major rally. More recently, pandemic disruptions and supply bottlenecks highlighted the vulnerability of commodity markets. What history shows us is not that prices move in straight lines. They don't. Markets experience corrections, volatility, periods of pessimism, and periods of euphoria. But long-term trends often emerge from underlying fundamentals: supply, demand, confidence, and liquidity. History teaches that ignoring those fundamentals can be expensive. Now consider who is paying attention. Smart money rarely announces itself. Institutional investors, family offices, mining specialists, commodity funds, sovereign wealth funds, and governments are increasingly focused on resource security. Meanwhile, concerns surrounding debt levels, deficits, and currency debasement continue growing. Governments around the world carry historically high debt burdens. Central banks continue navigating inflation, interest rates, and slowing growth. BRICS nations continue discussing alternatives to dollar dependency, and strategic minerals have become national security priorities. Organizations including the IMF, World Bank, and various government agencies increasingly emphasize supply chain resilience and critical materials. Silver's role inside technology and energy infrastructure places it directly inside that conversation. Investors who study cycles understand that monetary trends and resource scarcity often intersect. And if you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. So what does all this mean for ordinary people? No one can predict the future with certainty. That's important. Predictions are easy, preparation is harder. But understanding the forces at work allows people to prepare rather than react, because this story extends far beyond silver. It touches purchasing power, savings, inflation, retirement, and preserving wealth over long periods. History consistently rewards patience. Diversification matters. Risk management matters. Long-term thinking matters. Owning different asset classes, reducing unnecessary debt, building emergency reserves, maintaining flexibility. These principles remain timeless regardless of where silver trades next month or next year. Markets are emotional, but wealth preservation is often surprisingly boring. Patience, discipline, education, and perspective, those qualities matter far more than chasing headlines. As we step back and connect the dots, a larger picture emerges. Silver's recovery isn't occurring in isolation. It's happening against a backdrop of supply deficits, growing technological demand, geopolitical uncertainty, rising debt, and increasing concerns about long-term purchasing power. Markets move in cycles, headlines come and go, but the laws of supply and demand never disappear. Perhaps that's the most important lesson. Because while nobody knows exactly how the next chapter unfolds, understanding the forces shaping the world provides a tremendous advantage. Pay attention to the trends most people ignore. Watch supply chains. watch debt levels, watch energy markets, watch strategic resources, and watch silver. Because sometimes the biggest opportunities emerge long before the crowd notices. Before turning to price charts or daily headlines, it helps to understand why many commodity analysts believe the recent rebound in silver may represent something larger than a normal market fluctuation. The silver market spent several years absorbing one shock after another. Inflation accelerated, energy costs rose, supply chains were disrupted, industrial demand expanded, and all of those forces collided at the same time. What makes this period unique is that silver sits at the intersection of nearly every major trend reshaping the global economy. The energy transition requires silver. Artificial intelligence infrastructure requires silver. Defense systems require silver. Electronics require silver. And at the same time, investors continue to view silver as a store of value during periods of monetary uncertainty. That combination creates a market unlike almost any other commodity on Earth. Here's what many investors miss. The world does not maintain enormous excess silver inventories waiting to satisfy demand surges. In fact, according to several industry reports, above-ground inventories have been steadily declining after years of deficits. Imagine a reservoir that receives less water than consumers remove every year. For a while, everything appears normal because stored water compensates for the imbalance. But eventually, declining inventories become impossible to ignore. Markets then begin adjusting prices to ration demand and encourage additional production. The problem is that bringing new mines online is measured in years, not months. By the time shortages become obvious to everyone, the supply response often arrives far too late. Another reason silver's recovery deserves attention is because the economics of mining have changed dramatically. Many people assume that higher prices automatically translate into more production, but reality is much more complicated. Ore grades at many mature mines have declined compared to previous decades. Miners often have to process more rock to extract the same amount of metal. Energy costs, labor expenses, environmental regulations, and political risks all contribute to rising production costs. In countries like Mexico and Peru, which together account for a significant share of global silver output, political uncertainty and permitting challenges can delay projects. Meanwhile, exploration spending across the mining industry fell sharply during previous bear markets, creating a shortage of major discoveries. Mining experts frequently point out that the industry is suffering from a lack of large, high-quality deposits capable of replacing depleting reserves. And then there is the demand story, which may be even more fascinating. Historically, silver's price was driven largely by jewelry demand and investor sentiment. Today, that picture has changed. Silver has become an essential ingredient in modern technology. Solar panels consume enormous quantities of silver paste because of its unmatched electrical conductivity. Global investments in renewable energy continue to expand, particularly in China, India, Europe, and the United States. Electric vehicles require substantially more silver than traditional automobiles because of their complex electronics and power systems. Advanced military technologies, radar systems, aerospace components, and communications equipment all depend on silver. Even artificial intelligence infrastructure indirectly supports silver demand. Every new data center requires transformers, electrical networks, power distribution equipment, and semiconductor technologies that utilize silver throughout the process. Think about the scale involved. Governments around the world are spending trillions of dollars upgrading energy grids and expanding renewable power capacity. At the same time, AI infrastructure spending has exploded. Companies are investing hundreds of billions of dollars into chips, data centers, and electricity generation. Those investments ultimately translate into demand for industrial metals, including silver. In other words, silver is becoming a physical foundation for the digital economy. Few people think about that connection because silver itself remains largely invisible inside finished products. Consumers see smartphones, electric vehicles, and solar panels. They rarely think about the tiny quantities of silver that make those technologies possible. Geopolitics adds another layer to the story. The world is entering an era where nations increasingly prioritize strategic resources. Recent years have demonstrated how vulnerable global supply chains can become during wars, sanctions, and trade disputes. Governments are beginning to treat critical minerals as national security assets rather than simple commodities. China has invested heavily in refining capacity and resource access around the world. The United States and Europe have launched initiatives aimed at securing domestic supplies of strategic materials. Resource nationalism is becoming increasingly common, with governments demanding greater control over mining assets and export policies. These developments may not affect daily prices immediately, but they shape long-term supply conditions. History offers important lessons as well. During the inflationary 1970s, precious metals responded to deteriorating purchasing power and monetary instability. After the 2008 financial crisis, aggressive central bank stimulus and concerns about sovereign debt helped drive silver higher. During the pandemic, supply disruptions and massive fiscal spending exposed how quickly shortages can emerge across global markets. History rarely repeats perfectly, but it often rhymes. Periods characterized by rising debt, geopolitical tension, inflation concerns, and supply constraints have frequently created favorable conditions for hard assets. That doesn't mean prices move in straight lines. Volatility is normal. Corrections are inevitable. But long-term cycles are often driven by fundamentals rather than headlines. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.